Hello, everyone. Welcome to Relative Edge. My name is Jabari. Today is April 9th. It's 6 p.m. on a Sunday, 2026. I'm here with Rich Davis, and we are going to talk about the markets. They're hitting all-time highs. Oil dropped massively this past week, and we've got a lot to unpack in this video. So stick with us. Drop a like and a comment, and share the video if you enjoyed the video and you learned something new. That would be great. I appreciate it. And if you have any questions, feel free to reach out. So none of this is financial advice. We're just showing our observations and what we're noticing. But yeah, to open up, we got the 10-year yield a little coming down last week. We had a close. Remember that the 10-year yield is in this bearish channel right now, and we were also forming a small pennant over here, where the price we're getting higher and higher higher and higher lows and lower highs. We're in the danger zone if you zoom in on the weekly chart where we actually broke above that pennant and we were in that higher parallel. Look right here, for example. And if we head any higher, interest rates, they put pressure on the markets. And when interest rates go up, the dollar goes up. The dollar goes up in strength, the US dollar strength relative to other currencies, and markets take a hit from that, the general stock indices. So if you want to be long in the market, you want to see interest rates come down. Yeah, this is the weekly chart. So each one of these bars is 1 week. So if it makes sense that we're seeing this bounce because we're seeing interest rates come down, and let's see if we have the same correlation with the dollar. Before I go to the dollar, I just want to look at the daily chart. And yeah, we are coming down. We're making lower highs and lower lows. So right now we're in a short-term downtrend within a larger downtrend. So that's why we're seeing a bounce in this market. Let's see the dollar, the US dollar, which was trading kind of tricky. And this is actually a daily chart. So for since January 27th of this year, the dollar's been in an uptrend. It's been going to the top of the channel, the bottom of the channel, top of the channel. But as we get to 100, which is like a big psychological level, there typically is strong resistance or strong support historically at the 100 level. And nevertheless, you can see at 100, we tried peaking above twice actually and got rejected. And now we've actually broken out of the upward channel that we've been in since January. And now we're in a downward channel. So right now I want to see if this short downward channel that was within the upward channel is going to be breaking out this week. We may go to the top of that channel, but I want to see if we remain in upward channel or if we remain in the downward channel. Um, the DXY, yes, and this is the daily chart. So on the weekly chart, we ended last week at 98.22. So the last 2 weeks, we've seen some nasty selling in the dollar, so that's why we've seen a bounce. And like we said, interest rates determine the U.S. dollar strength, and therefore the stock market is going to pop off. And we've seen gold and silver also pop off. Um, yes, yes, relative to other currencies, yes. Um, and then, as you know, the dollar is connected as of now to oil because of the petrodollar, meaning other countries have to buy dollars to buy oil to trade oil. As of now, that's changing slowly. So let's check out oil, which it seems like we can't stay out of a war for a couple days. One day there's a war, one day there's a ceasefire, the next day it's over. So that's kind of interesting. And look at that gap up. Wow, look at that gap up on oil. As we've seen lately, is an inverse correlation between crude oil and the stock market and silver. So yeah. And one thing you're seeing, like last weekend, look at this week on Friday going into the next week, we actually got a gap up, right? We got a gap up here into the top of this bearish channel. So every time we hit the top of this bearish channel, we get resistance, force downwards. So the last support was at $90, and that's why I drew the bottom of this line. So we're getting hit. continuously. All I did was take a line that goes to the top of these one, two, three tops, and then I drew it down and put it at the bottom of this 90 where we bottom here. So if we were to roll over, which I believe we will, that means oil could come up a little bit and test like it kind of did here at the beginning of the week. Test 90, which was previous resistance, and now it should be support. It was previous support, and now it should be resistance, and then move down to the bottom of this channel, which could be in the 60s, where I believe we will actually come down to just because we got a gap up on February 27th. And as you know, most gaps, if not all gaps, get filled. So that is where we gapped up. I believe that's where we'll come back down to. We'll find a floor, and then I believe oil will continue to move higher.
It's if you look at it, that's a Wycroft distribution pattern.
Yeah, yeah, which is basically a distribution pattern is a bearish pattern.
Hmm.
Um, yeah, so I want to move to the SPY next. And SPY hit all-time highs last week. Pretty much V-shaped recovery here. Um, and but we're seeing some, if you look at the weekly chart, it looks like we hit an all-time high. So look at this. We hit a higher high, right? Right, higher high. But if you look at the RSI, did we actually hit a higher high? The RSI is the relative strength index. It shows the momentum. Looks like we have a lower high. So that means that this could be a potential short-term top. Might see a pullback. We'll see if what's likely to happen at minimum is a test of the previous high, which would
Yep,
be the next area of support at close to 7,029, call it 7,000 even.
that's right.
So and then let's see, gold and silver. Gold dropping down 1.42%. Um, on the week, it had its one, two, three, fourth week above green, um, closing above the 50% level of this control bar. Today we might have a flat week. We'll see what happens. And then silver, we are down 2.84% last week. Silver also had its one, two, three, fourth week upward close, close above 80, which is nice to see. Let's go to the daily chart. We closed above the 55 simple moving average, and it looks like, let's see if we find some support on that this week. There's a bit of a control bar here on this big move day. So I would say there should, let's see if silver can hold the 79.50 area, which is where it's at right now, actually. So we'll see what happens with that. And then I'm going to let Rich take over here. Yes.
Oh, thank you. All right, now the audience can know what I'm talking about.
There you go.
So this is the monthly chart, as you can see, of the S&P 500, and looking at the last, let's just say 3 months, going back this year before we had April, we was in March, and I was seeing what could be possible as a repeat of last year. Where we did a downturn in April and bounced and went on an incredible run to what is this January of this year, 2026. So what's the difference this year in that data? One, we have midterm elections, in addition to last year, for the first time, so much tariffs. There was a lot of bad news until that got resolved. So tariff wasn't the issue this year. We already had a downturn, midterm elections coming up. So continuous inroads and headways into bullishness into the markets, even though we had geopolitical things with the Iran conflict. So we just bounced. So even with breaking with the all-time high, you're talking there a couple of things that's happened in the news. One, when we were in March, it was the largest amounts of put purchases in for so many years. In addition to above the all-time high was a lot of leverage shorts and all the way up to and above the all-time high. So you're talking a lot of um, hedge funds and large money managers had to close their positions. So how do they close their positions? They have to buy. So
Mhm.
not only people buying with regards to investing long term, you have large money managers closing their position and buying too also. So hence the continued uptrend. So you got two forms of buying back to also. So,
Yeah, and to add
but
something there is last week was options expiration. So when you see a lot of retail buyers buying a bunch of
mhm,
puts, institutions don't want to pay out on those puts because institutions do the vast majority of the options selling, and
mhm,
retail does the vast majority of options buying. So institutions don't want to pay out. So what are they
mhm,
going to do? They're going to try to push the market up on options expiration so that they have
mhm,
to all-time highs so that the retail gets crushed on their put buying. So yeah, so to keep
mhm.
in mind.
Absolutely. And I just want to just also illustrate that from we see a bearish divergence on this monthly chart as we were continuing to rise higher from March 2024 to let's take this in stages to January of 2026, where we started to hit the all-time high and turn down. As you can see, the IRSI was going to the downside while the market was going on the upside. However, our our downturn in terms of the price action only lasted until March, until we bounced, as you see, which this candle hasn't closed yet. We got another what time? 11 it is another 11 days until, or shorter than that, until that candle closes. So potentially, because of this run up, as Jabari says, we're looking at the bare minimum to retest the all time high now.
Yep.
So yeah, and also there's some things happening behind the scenes in terms of interest rates, which Charlie was showing you before, going lower. However, cut if we cut interest rates, you're talking, and it can cause inflations with a new Fed chair coming in addition to private equity loans, especially with AI. They're not making as much money as they thought in these companies. So there's a potential bubble in AI, and you're talking about in private equity possibly reneging on their loans, in addition to real estate, which is the big money purchases. They're quite low in terms of house buying.
Hmm.
And so that's some fundamental analysis that sometimes the price action is actually lagging. And just like 2008, with the credit default swaps, which was hanging by a thread of these mortgage loans, it didn't really come to fruition until maybe a year or two later, where the price action started to react.
Mm.
Yeah. Also, I just want to note that this V-shaped recovery is the fastest recovery since 1928, and just as a reminder, if you didn't know, 1929 was the crash which caused the Great Depression. Not to scare you, but to prepare you for possibilities of what could happen. Maybe not depression. We have a lot more um, tools to thwart that off, especially with looking at 2008, not to cause such a disaster if that actually happens in the price action. As Jabari and I was talking about before, stay with the trend until it ends.
Yes, yes. Don't fight the trend. If the market's going up, go with it,
Yep.
Right now it's
And
going
this
up. you
Yep.
know? So, um,
Yeah.
all right. Did you want to show another chart or do you want me to get into the relative charts?
Oh, you can actually, why don't I just show one more? Being I'm in crypto, I'll just show overall what's happening with Bitcoin as, excuse the, I'll move a few things.
Always put
Let's
notes in
go.
your chart.
Yeah. God, I had so much to. So this is a daily candle, which starts at 8 p.m. each night. As you can see, we're dropping, which probably more than likely uh, the S&P 500 futures are dropping too. Also, it's very sensitive to that. So let's go to the 4 hour. Yeah. So that's dropping, and that started at 4 o'clock, 8 p.m. will be a new day. Uh, and I did draw an old trend line here that if it passes it, it's going to break that upward trend line, this green trend line that I drew before. So there's probably a steeper one too, also from here to here. This trend line was from the low of the year.
Mhm.
It actually broke through it and came back in, as you can see, for those 3 weeks. If I go to the weekly, those 3 weeks, you're gonna see as you would see is in the S&P 500. So it's actually very sensitive to that. And oh, let me go back to that was interesting. And if you see that, look at this huge top and tail. Let me spread that a bit on that. These tails are very telling
Yep.
for crypto. That is that there's a reversal coming, and this candle will close at 8 p.m. tonight. Another hour and 35 minutes, and we will see. And as you can see here, it's coming down, touching the wick, the prior week, and it's very telling that more than likely what professional traders, say swing traders, will do if it reaches that top and tail, they will start to put in short positions. But also, as you can see, this is actually a rising wedge. It's probably more clearly on the daily channel. So on a downtrend, that's bearish. On an uptrend too, also. So we'll see how the market acts. So watch the S&P 500. It definitely affects Bitcoin if you're in crypto, and your altcoins too, also, which will actually drastically drop even faster than Bitcoin itself. So as you can see, comparison, if you look to the right, you see Bitcoin is down 2.39%, and using Solana as a barometer, that's down 3.36%.
Mm.
And that's what I have.
We'll get into the relative charts now. This is, at the end of the day, the relative edge. So now, after comparing the charts based on its price in dollars, so the stock S&P 500 versus dollars, gold versus dollars, oil versus dollars, we're going to compare the assets relative to each other and take out the dollar. So this is the Dow versus gold. We've been trending in this downward parallel channel. You can say up in since August 2024, and look where we're at. We are right at the top of this channel, the resistance side of the channel. Every time we hit the resistance side of the channel, and this is a daily chart, meaning that each one of these candles is a day. We every time we hit the top of the resistance side of the channel, we come down. So if you look at the RSI, it looks like we're moving higher above the midpoint. So I wonder if this week, if the Dow will break out of this channel, meaning that the Dow Jones and this S&P 500, the general equities market, will start to outperform gold, or if we will continue its downward pattern um, and break to new lows. I believe that the high, that support right now our resistance right now would be at 1116, but until we break this downward parallel channel, I have to believe that we're going to find resistance here. So we'll watch and see this week, see if we come down or if we break and move higher. And then, so if we break and close a few days above this trend line, then that means that we can move to 11.15 on this ratio. And if we come down lower, we can come down to uh, at or below 7.8. So move to the gold silver ratio. Gold silver ratio is breaking down and has broken down. We're trending in this overall downward trend channel going back to April of 2025. Then we broke out of the channel. We saw a massive move up in December all the way to late January, in which we had a massive correction back into this downward channel. Um, but now we're seeing more resistance at 65. We were in this slight upward channel and we came to resistance at 65. So some downward pressure at 65. So now we've broken out of this upward channel. So I'm assuming that we will drop towards the lower end of this downward channel. And we would come down to the first resistance would be at 57, then 55, and then if we break through those, we will go to 44. So right now, silver is outperforming gold, which typically means that because gold usually follows silver, it usually rallies after silver. That means both gold and silver are going up because silver usually rallies with gold. So if they're both rallying, but the gold to silver ratio is declining, that means that silver is rallying faster. So, and then last week with the miners, silver miners versus silver, where we've broken out of this upward channel. We've been trading sideways more or less, meaning that holding silver versus holding silver miners all the way back since February 2020 or February this year. You've been pretty much break even more or less. So, but if you look at the RSI, we're in a downward channel. I believe that we have actually broken below the 50 on the daily. We came back to try to test it on resistance. So I think that we will actually move down lower here. Given that the gold silver ratio is coming lower, I believe the Dow gold ratio will come down. So the silver miner ratio will come down, in my opinion. And then one really good chart to look at is the silver versus the DXY. And it looks like we tried testing 1.47 and we couldn't test that. So now we're in this steady downward channel. Let's see if that continues. If that continues, silver's going to continue to outperform. And then silver versus oil, which was this falling wedge that was forming over the past week as oil was performing very well and silver was performing relatively poorly. We've broken out of that. So the next, usually after a breakout in the rising wedge, we run up to new highs. So, but the first area of resistance is 1.13, which I wouldn't be surprised to see if we test that this week with my assumption of oil continuing to sell off and silver continuing to push up. Long term, I'm bullish on both assets. But I do think short term oil deserves another correction. Obviously, it's headline driven, but technically speaking, it is overbought, still overbought. And then lastly, since we're coming about time here, I want to look at the 10-year yield and the dollar. This is the MMRI. Give credit where credit's due. This is from Gregory Mannarino. And basically, he takes the 10-year yield, which is the interest rates, and the dollar, multiplies it and divides it by the golden ratio 1.61. And if you run a relative strength index on it, you can see and run a parallel, marking the highs as resistance and the lows as support. You can see, and I drew an arrow every time since 2022, we've hit this top of the parallel in the RSI, we found resistance. So, and as Rich mentioned when we were on the phone earlier, this is looks something similar to a Wyckoff distribution, which is a bearish pattern. Because look, we got a higher high, like from October 22 to October 2023, a higher high in this ratio, meaning dollar and interest rates were going higher. But if you look at the strength, the momentum of it, we got a lower high. So that means that the trend may be changing. Now we got an equal high here in January 2025, but a lower high once again on the strength. And now that we actually got a lower high here, just in the end of March, and we got a lower high in the resistance. So what that tells me is that we are going to break down here and come down to support at 206. So that means interest rates and dollar will come down, which means in the short term, and keep in mind every time this happens on average within, it looks like the range is 68 days, so call it 70 days to 90 days. So in the next 2 to 3 months, we should see this ratio come down. And when, as we know, as interest rates and the dollar comes down, the Dow Jones Industrial Average goes up, Bitcoin goes up, gold, silver goes up. The question is how fast they will move relative to each other. So we're gonna keep watching this. This is the Relative Edge. We appreciate your time. If you learned something new, drop a like and a follow. And if you have a question about anything I said, please drop a question in the comments. That'd be great. And share this with someone that you think will find value in it. And I appreciate your viewing and taking the time to be with us. And I hope you have a blessed week. Rich, do you have any closing
Yes, sir.
words
Oh,
for us?
yeah. Like Javari said earlier, this is not financial advice, and manage your risk at all times. Stay with the trend until it ends.
There you go. I like that advice. Stay with the trend until it ends.
Yes,
So,
sir.
all right, guys, you have a great week.
All right.
Talk to you
Take
later.
care. All right.
Bye.